Already. All right, so didn't do anything in here yesterday. I think possibly the price action might be a little bit better today to trade this thing. It does look like we are getting some pretty good movement this morning. We got the NASDAQ up 264. NASDAQ up 264. The ES is up 33. Dow's up 288. And the Russell up a 2230. Gold pretty much flat. We do have crude oil kind of hitting the skids today, down $3, down to 82. Trading that, I believe, what contract? I believe it is the Augie. No, it's a September. October. I'm wrong again. I haven't traded oil in God knows how long. So we are trading the October contract. Definitely a bit of... the future contracts down the scale are all trading lower as well. So that, I'm sure, has a lot to do with today's action. Here today. Big news, I would say, out of the earnings front is Dick's Sporting Goods getting absolutely hammered, very similar to what happened to Walmart during its earnings release. A lot of the same type of thing. Guidance, very poor. The report in general was much lower than expected. Thing is getting absolutely smashed, trading 149 right now, down a little, literally like right around $30. So a big move there, saying that it's down about 13%. Not good. I mean, it doesn't really bode well for retail in general, and I would say specific retail. So it's not like the Targets and the Targets and the Walmarts. I think those, actually, the damage has been done there. I think the problem with a thing like Dick's is that they're catering to a specific market. Let's face it, not everybody is a golfer. Not everybody's a sports enthusiast, baseball, basketball, the main sports. I mean, I've gone in there and looked at their camping equipment. It sucks. I mean, even if you're an outdoorsy person, a lot of their outdoor stuff sucks. Their gun department stinks. Their hunting sucks. It's terrible. Even their fishing department is fucking terrible. If I'm going to go and get anything outdoorsy, I'm going to Bass Pro Shop or Cabela's. That's it in a nutshell. That's where I'm going to get that kind of stuff. I'm not going to Dick's. And I think that's the problem, right? I mean, you're catering to a specific market, mainly the golfer and more retail apparel type of person. And I just don't think that's going to hit going forward. And I think this is going to be a problem for them. And like a lot of other retailers in this space, I think a lot of these are in trouble for quite some time. I've been kind of saying that overall to myself. I think anything consumer centric that's not a staple is, I think, going to be in trouble going forward. So that's kind of the news of the morning. And then I have AMD here. It's saying it's up on broker action. I don't know what that means. Like somebody, what was it, like Dewey, Cheatham, and Howe said something. And Raymond James, like, who gives a fuck with Raymond James. Like, does anybody even know? Like, if you actually grabbed some random person in the supermarket and asked them who Raymond James is, I mean, I have to believe no one's gonna know. Like, they probably wouldn't even know what J.P. Morgan is. But I think you probably have a bigger chance of finding somebody who knew what J.P. Morgan was, or even Morgan Stanley, than you would Raymond fucking James. Like, I can't even believe that, like, they're even still around. But I guess, they have their place too. I guess, no diss on anybody who works for Raymond James, but, who gives a fuck what Raymond James says? But apparently it's got the stock moving. I don't think it's up because Raymond James, I would have to believe there's something else going on. I think maybe more of a sympathy type of a bounce after yesterday's move down. All the chips kind of got hit yesterday. Overall, Nvidia and the like, they were all down. So I think today is it's just a bounce kind of day, and more positioning as well, because I think anything in the chip space right now, all trades trying to position themselves for the mighty Nvidia earnings. There's no question about that. That's kind of the Super Bowl of the market right now. And I honestly don't understand what the big hoopla is, because a lot of these stocks have actually been kind of like dead the last, since like April. Like, you can look when they had their run up, and here it is, actually April, May. They all kind of had that run up, and since then, they really have gone nowhere. They've been kind of all over the place, and what I've seen is that I don't believe there's much new money going in here. I think where the new money is going, and again, it appears to be, just my belief, is a lot of the XLP stocks. Because I'm watching the XLP pretty extensively lately, and it's rallied really well. Trading $87. It was up I think $1 yesterday. I don't know. I'm looking at that, and then you go and look inside that, and you can get an idea of what's moving and what does this have in here. Even Walmart, with its big, huge sell-off. This is a big part of this portfolio is Walmart. This thing has gone up, right? Because it's got Walmart, it's got Costco, it's got Coca-Cola, it's got Procter & Gamble, it's got Philip Morris, it's got Target. Now, these retailers, in my opinion, like the Walmarts, the Costcos, and the Targets, they're not really, to me, they're not like specific, right? I think what kind of helps them along is that food business with Walmart and Target. And they are kind of staples that, even if things get bad, people are still going to Target, and they're still going to Walmart, and they're still going to Costco. Procter & Gamble, Philip Morris, just to name a few. Like, even these, I think even some of these underlyings in themselves, like Colgate, Mondelez, PepsiCo. I don't know, why I talked about this before. What the fuck is Monster Beverage doing in a consumer staples? I don't know. That's kind of fucked up. Altera, Keurig, Dr. Pepper, Cisco, the mighty Cisco, the company everybody loves to hate. But anyway, I look in here, and a lot of even these like underlyings themselves have done pretty well here, and it has everything to do with, I think, money moving out of tech. And so anyway, that's just one play that I see happening on the board. And then I also, as well, as much as this hasn't done that well right now, because it is interest rate sensitive, overall, I'm seeing this actually get money flows as well, which is utilities. So anyway, that's kind of the take going on. Did no trades at all yesterday. It was kind of a first in a while that I got to turn the air conditioning on because I am sweating, even though it's not that hot. I'm sweating here. It's probably because I'm blabbering. But that is kind of the take, and you can see from a news point of view as well, there's really not, I'm not seeing a lot of news hit the tape at all. We've got Bitcoin just below 80K now. It's 78,910. It was up pretty high earlier. It got up to 79,430. So it looks like there is a little sell-off there in Bitcoin. My opinion on Bitcoin overall, if anybody cares, I would be careful. I would be careful of Bitcoin only because I really believe there's more of a liquidity event going on with Bitcoin right now than it is something fundamental or because the government changed how they're going to do. I think a lot of that is just bullshit, just in my opinion. And I would be careful because I do believe what's happening now is a lot of liquidity is being offered to people in the crypto space. And it looks to me like it could possibly be a rug pull. Where, you know, these markets get really liquid, they're offered liquidity, and then it's basically just a ticket for many folks who've been sitting in there a chance to get the fuck out. And so that's what I would be afraid of with Bitcoin right now. Because I don't get involved in all the bullshit and, you know, it's this and, oh, it's the cycle and all this other shit. And it's like, you know, and it's the same 10 fucking idiots on social media talking about the same shit over and over and over again. It gets to a point where it's like, you know, it's like I almost feel sorry for these people because it's like, is that all you do? Like, have you even gone back and fucking listened to your fucking self over the years? Have you even took a moment and maybe rewound and listened to what the fuck you've been saying for the last, you know, 5 fucking years? Like, have you even listened to yourself? Because you been spewing the same fucking garbage for 5 years and none of it's come true. Yeah, it's kind of bizarre. It really is bizarre. So anyway, that's kind of what's going on there. And then the other thing that's a little, little disappointing today is I kind of thought gold would continue its march forward here, but no, it has not. It's basically stalled. It's not like collapsing today, but it has stalled, and it's been on since it hit 4K. This bounce back up to 4,600 here has been just a absolute monster. Next stop, obviously, let's just blow this up so we can see full screen here. And this is a 4-hour chart, which I think are always the best ones to look at if you're looking for longer term stuff. We got 4,700, which is going to be a pretty key resistance level there. Also up near 49. So basically the big round numbers, like it's pretty blatantly obvious that those big round numbers are going to be where they look to break out of. And then ultimately the mighty 5K. Can gold get back up over 5K before the end of the year? I certainly hope so, because I'm in a bunch of, and here's full disclosure, I'll even show you my position. I'm getting absolutely just fucking crushed. I have a boatload of options in gold. and I'm down about 600 bucks in these. And I bought these. I bought these options a long time ago, probably earlier in the year. I got them back probably around January or February last year, I think. But I don't think they're going to make. I don't think this is going to make it back. I think some of these. I think we do make. I think the GLD possibly makes it back up to 500. It ain't getting up to 600. I bought some 600s, and look, I bought these. Like, these are just like, I'm rolling the dice, right? I'm taking the cut at the bat, you know? And I always tell people to do that all the time with options, you know? There's nothing wrong with that. You know, I know it's frowned upon by so many people out there in fucking La La Land, but it's like, you know what? I can say, look, I've lost a ton of these, but I've also made a fucking shitload of money from some of these, like, crazy trades. Like doing, you know, so like if you think gold is going to just fucking rip, well, go out in time, right? You got these leaps. You can go out as far the fuck you want. Go out in time and, you know, take a fucking swing. You got nothing to lose. You know, I mean, and so what? You're fucking wrong. And it fucking goes to zero. But so what? What did you risk? Like, for example, let's say I go out to, you know, if I were now, so a year out from now, let's look at that. So we're talking probably a September of 27. Go out here and just take a fucking cut, man. Take a cut. Now, you don't have to buy the option. Like, just, you know, you don't have to go spend $2,700 and buy a 500, let's, for example, if you think it's going there. Do the spread. Buy a 500, like 510. Do a 10 wide. You know, make it little worthwhile. But you can see, you know, for 230 bucks, I'm going to take a fucking swing at this. And my max profit is 762. Now, you're not making the max profit. You know, you got to wrap that around your head too. But if I make half of that, I make a third of that, I'm fucking fine with that. I'm fine with that. For risking $200, like, that's more than 100, you know what I mean? So again, and then you're not using any fucking money. Folks, that's kind of the key here. You're not using any fucking money. Like, you're risking 200 to make, you know, 3 times your money. Almost 3 times your money. So, like, you know, don't be afraid to take these cuts. And I know everybody says, "Oh, buy in the money," and then, yeah, okay, that's great. I do that too, right? But there's nothing wrong with taking a big fat swing on something that's out of the money that you know is, like, again, it's a risk. I'm gambling. Let's face it. Yeah, people say, "Oh yeah, it's gambling." Yeah, you're right. I am gambling. But I'm not just gambling for the sake of gambling. I'm gambling with, you know, with some data and facts on my side that, you know, there's a good chance that a year from now, this could be fucking 500 bucks. I mean, we've seen how gold's moved over the years, especially in most recent years. You know, and if inflation is as bad as everybody says it is, I mean, there's no reason why this shouldn't go back up to 500 bucks. But my point is don't be afraid to take stabs here. But if you're going to do it, and I always say this too, if you're going to take a cut or you're going to take a gamble, go out in time. Give yourself time to be right. Because that's the key. Because if I were to go to turn around and do this same trade in, let's say, like one of these weeklies, and although I'd be able to say, oh, it's cheaper and it will come in faster, I always found that when I do the shorter term options, they don't usually turn out as well as the ones that I've gone out in time and given myself time to be right. Because the problem with the weeklies is you need to be right away. Like, so if I were to go and do something, let's say I did a 425, and let's say I did a 10 wide. 425, 430. I'm going to spend 235. Now, the problem with this one, and even though it's like slightly out of the money, and I can actually do one that's a little deeper in the money if I really wanted to, you know, give myself a little bit more delta to make the move. This fucker's got to move. Like, this has got to go up fucking $10 in the next 7 days. And it's got to go up $10 sooner than later, because what do I have against me in a shorter term option that nobody really actually even considers is that theta, right? That theta burn, that time element in your options that deteriorates your options when you're long options, right? When you buy them, that you have to be right quicker, because even if you were held on to this and let's say it did nothing, and then on the last day that you owned it, it goes up $5, you're not going to make it up. You're not going to make the money up to be able to be profitable on this, because you ran out of time. Okay, so that's kind of the difference between doing stuff and taking a cut and going out in time than doing stuff that's short term. Now, look, this might feel better because this comes due a lot sooner, but the downside to it, and then look at liquidity. Look at it here. There's no open interest here. So I'm going to have to get out of this trade. That's the other thing you have to consider. Like, weeklies are great, but the problem a lot of times with weekly options in general, they are fucking illiquid. And like, I could even be up in this, but the thing I have to think about is that there's got to be somebody willing to buy this fucker on the other side. And if there's nobody willing to buy it, even though I'm up, I'm going to have to keep reducing my price I'm offering in order for somebody to sell it, and that's going to erode into what I believe is my profit. So that's the other thing that I never see anybody talking about out there in fucking La La Land about trading weeklies. They are very illiquid most of the time, and you can see just the difference. Here's the 7 day. Now you go out to the September, and you'll see the open interest in here is probably twice. Right, you can see everything's in the 1,000, 7,000, 4,000. I'm looking on the call side here, 8,000, 27,000. Right, massive amounts of open interest here. Right, so much more liquidity in the monthly options. That if I want to get out, because right, anybody will give you a fucking trade. I say that all the time with an option trade. Chances are, if something is illiquid and you throw a bid out there and you're willing to buy something that's extremely illiquid, somebody will take it off your hands. But where the problem comes is when you're going to try and get rid of it, and it's an illiquid fucking, it's an illiquid strike, or it's an illiquid option expiry. You're going to fucking sit on that, and what you think and what they're bidding up on the screen ain't what you're getting to get for it. It's kind of like the Zillow of fucking house prices, right? I always say people are like, oh, they look at your house. Oh, my house, I went on Zillow, and it says it's worth $900,000. Yeah, that's great for fucking Zillow. But you know what? Is somebody willing to come in and buy it off you for that? Because the minute you put that on the fucking market, even though Zillow says it's worth $900,000, they're going to come and say, oh, well, you know what? No, it's not worth $900,000 because you know why? Oh, because your roof is 15 years old, and the water heater is 15, 16 years old, and that's going to be replaced, and there's a fucking chip in the fucking paint in the bedroom upstairs, you know what I mean? That needs to be fixed, right? And then all of a sudden, all these little things that you just kind of looked past over the last 20 fucking years, like, just don't exist to you. Now, if somebody comes in and buys it, all those things are a fucking problem. Oh, there's a nail hole in the bathroom, and then the sheetrock's popping. You know what I mean? It's that kind of bullshit. And the next thing you know, your house ain't worth $900,000. It's worth fucking maybe $750,000. It's the same thing here. It's the same kind of thing here with the options. So just be aware of that with that. And then if you're going to take a cut, on things. Just stick to make sure you always look at liquidity when you go look at options. It's so important. And it's something I never see anybody fucking talking about. Even these guys, like this new thing now out in La La Land too, is people selling options. Like you're seeing all these people like doing the zero TTE on the SPX, and they do those zero option kind of bullshit things, and it's like. Yeah, and they're showing you how much money they make, but one thing they're not ever, they never show is when they get their fucking ass handed to them. Like, nobody ever shows those, and trust me, like, more times the statistics show that you will make money with those strategies. Yeah, okay, fine. And statistics show that, whatever it is, 70 or 80% of the time, you will make money. Yeah, all right, great. That's great for a success rate. But what they don't tell you is that fucking 20 or fucking percent of the times that when you fucking lose, you get your fucking ass fucking creamed. Your ass is getting pinned up against the jail cell, and you're becoming somebody's fleshlight. So, and nobody ever fucking talks about that. And that's why I do not do zero TTEs, because I just know better. And to me, I don't want to lose fucking $20,000 and use the amount of leverage that goes on with the SPX. You can do similar stuff with the SPY and not use as much leverage, but you're still going to use a lot of leverage. You're still going to use a lot of leverage. And with these, you're not going to make as much money. But, but I don't do them. To me, it's just too much. To me, it's too much capital versus putting up too much capital to make too little gain. It's not worth it to me, just from a stress point of view and just from an investment point of view, because, I feel like I do much better, selling puts on Netflix right now. Like, I think a good trade right now, even though Netflix has actually made a nice move, I think selling puts on Netflix is still a good trade. This is where we've been, and this is where we're at with Netflix. Is this run over? It might be. I think it's got legs to 90. That's just my opinion. I do think Netflix has a room to 90, and I think selling a little in the money put rather than buying Netflix, right? I'm in some Octobers. I still think this one is the best. If you sell the October 80, you can sell that for $4.55. That puts your cost basis on Netflix at about $76. Wait a minute. Did I sell? I don't think I sold. Wait a minute. Something's wrong here. That's not right. Delete. That's wrong. Break-even stock price is not $84. That is a wrong. So break-even stock price, since I'm selling. Oh wait, I'm selling a call. I'm an idiot. I'm an idiot. Here it is. It's $4. Yeah, see, I knew that. But I'm an idiot. Yeah. Break-even stock price is $76. So if you sell the 80 put, you're going to use $1,500 worth of capital, where if you bought 100 shares, right, that's going to run you $8,000. So to control 100 shares of Netflix, basically at $76, and use a fraction of the capital, this to me is a much better trade than just going and buying Netflix. And I have my money where my mouth is. I'm actually short the 80 puts. I'm also short the 80 calls, but this is a different trade because this is a naked option that I have. This is a covered call because I have 100 shares of Netflix. And so basically what I'm doing is I'm selling calls against my 100 shares, but I'm also hedging that with this put that if this gets called away, I will still own it at $80 if it continues to go up. All right. So anyway, that's to me that's a little bit better of a trade than messing around with buying 100 shares. So those types of things I am still doing, and the volatility is pretty good in there. And other than that, I'm really having a hard time finding things I want to go long on. I'm also having a difficult time finding things I want to even short. Because although I think the software business overall is extremely in trouble, I'm not sure if it's really a true short, because I look at the likes of like a CRM, and CRM has had a bit of a bounce pretty significantly. I do think it's getting over its skis here, but I don't know if it's enough for me to go in and short CRM. They do have earnings coming up. That's also got me on the sidelines a little bit. I think their earnings are coming up. I can't see it. They're coming up tomorrow, in fact. So tomorrow, they're going to have earnings after the close. And likely, I would think that they're not going to be that great. But then again, who am I? Their earnings, when you look down to it, CRM's earnings might completely suck, but then they come and announce some big buyback, and then all of a sudden these are like, I don't think there's a lot of future in them. I think a lot of them are going to go. I think a lot of these companies are going to wind up merging together to save themselves. Because if there's a business that AI is going to replace, it's everything these clowns have been doing for years. And the only thing that's been keeping these companies even alive over the years is their license renewals. And more companies are coming to the realization that, we don't need this shit. We don't need this shit. We can basically have AI do it, or we can, go to some open source fucking low level fucking mechanism and have it do it for a fraction of the cost. Because doing this kind of shit is not that sophisticated anymore. I have to say, when they first came out, 15, 20 years ago, when all these programs, in the infancy of the internet, yeah, these companies were kind of revolutionary, but now their technology is fucking dated, old, and out of date. So anyway, that is kind of my take there. And other than that, I don't really have much of anything else. Like I said, it's been kind of it's been kind of a shit week in general. Not really, I have not traded this account yet. When I do, I am going to certainly turn on the stream and trade it, but I just really have not paid attention to it. So it looks like we did have something come out at 8:30 because the market is selling off a little bit. I didn't really see anything. I didn't think anything was hitting the tape though. Where is that? There is a thing on here. Isn't there like a dashboard or some shit on here? Where is that? I don't know. I'm still getting used to Thinkorswim. It is a little messed up. I mean, in general, like I don't know. It's weird. It's definitely something I got to get used to again. It is a little clunky, but the nice thing about it is it's fucking free, and that is the nice thing about it. But I thought there was a dashboard on here, and I kind of forgot where that button was. It's not here. Home screen, that's it. That's what I was looking for, because this actually tells me this tells me the what was going on for. I don't see any. No, there was no econ events. And the nice thing about this is it tells me right where I'm at for the day. But yeah, that's all I see. All updates, and there's not much. Oh, durables, durable goods, or is that coming out 8:30? It says in 20. Or is that tomorrow? That's tomorrow. Wholesale, yeah, GDP. I guess so. I didn't think maybe there was something. I don't know. Who knows? Anyway, that's it. That's all I got. No, nothing new. No trades. Gonna keep an eye on the software space. There is an ETF. What is it? Is it IGV? I think it is. Is it IGV? Is the ETF, the software ETF? IGV. I think that's it, right? Yeah, tech software. IGV is the software ETF. It's the bigger. I think it might even be the biggest one. There is. It's the one they actually put on. It is the iShares, so it is the one they stick on CNBC quite a bit when they talk about software. But that's one I'm going to be watching here. I do like this short, especially over in this area, like over 108. I really like it short, and a lot of this being over 108 is going to depend on CRM's earnings. We'll see. This is relatively liquid. I'm not going to say it's extremely liquid. It's a relatively liquid. As you can see, there is a decent amount of open interest at some strikes. So it does have some decent liquidity. So it is worth trading. So if there's something I'm going to go short on, it's going to be this. And I'd probably be going out into December. And I'm not going to do anything fancy with this. I'm not going to sell a call spread or something like that. I'm probably just going to go and buy a put spread. And with something like this, I would likely go a tad in the money, not a lot. I'd go a tad in the money and do a typical $5 wide put spread, like a 105, 100. Cost me $278. I think max profit on that's probably $230 something. 222. Then you're going to get this little warning because it's hard to borrow. It means that if you get assigned, they may have to charge you a fee because it's hard to borrow. When it says it's hard to borrow, it means it's heavily shorted. So be aware of that. And there could be a short squeeze on it as well. So if Wall Street Bets comes and says something, chances are it could go, when you think it's going down, it could actually have a short squeeze. Hard to borrow doesn't necessarily mean that there's so much. It just means that they can't, specifically hard to borrow at Schwab means you can't get stock, or they can't borrow stock to be shorted. That's what hard to borrow means. Doesn't mean it's hard to borrow everywhere. There might be another brokerage firm that doesn't have it as hard to borrow. So not every firm will have it be hard to borrow, but at Schwab, it's hard to borrow. Which chances are, if it's hard to borrow here, it's hard to borrow elsewhere as well. But, anyway, It is what it is. It means you can't. It means you can still short it, but just be aware that if you get assigned, so if I get assigned my stock here, which I would believe I'm not going to hold on to it long enough to where I'm going to get assigned. But if you do, they're going to charge you a hard to borrow fee, basically, to get that stock. So anyway, that is it. That's all I got. I think, going to be another slow day in the trenches here. And as I said, if I do, in fact, trade my account, I will turn the stream on.